Regression analysis is a statistical method used to examine the relationship between dependent and independent variables. It helps predict future values, understand relationships, and identify trends. In finance, regression analysis is applied in risk assessment, portfolio management, and financial forecasting. There are various types of regression analysis. Simple linear regression examines the relationship between two variables, while multiple linear regression examines the relationship between one dependent variable and multiple independent variables. Logistic regression is used for binary outcomes, such as predicting the probability of an event occurring. Simple linear regression models the relationship between a dependent variable and an independent variable using an equation. The objective is to determine the best fit line that minimizes the sum of squared errors. Let's analyze the relationship between a stock's returns and market returns using simple linear regression. We gather historical stock and market return data, perform regression analysis using Python, and visualize the regression line. This example demonstrates how to interpret the results and understand the relationship between the variables. Multiple linear regression models the relationship between a dependent variable and multiple independent variables using an equation. The objective is to determine the best fit plane that minimizes the sum of squared errors. Let's analyze the impact of multiple factors on a stock's returns using multiple linear regression. We gather historical data for stock returns and multiple factors, perform regression analysis using Python, and visualize the regression plane in a 2D projection. This example demonstrates how to interpret the results and understand the relationships between multiple variables. Logistic regression estimates the probability of a binary outcome using the formula. Let's predict the probability of a stock's price moving up based on historical data using logistic regression. We gather historical stock price data, perform logistic regression using Python, and visualize the predicted probabilities. This example demonstrates how to interpret the results and understand the probability of binary outcomes. Regression analysis examines relationships between variables to predict future values and identify trends. Different types of regression, including simple linear regression, multiple linear regression, and logistic regression, have various applications in risk assessment, portfolio management, and financial forecasting. Integrating Python enhances the accuracy, efficiency, and visualization of regression analyses, providing valuable insights for informed decision-making.